Okay, everyone, welcome back to another weekly watch list video for you guys. So in this video, we're going to go over everything that we need to know for the week ahead. So those key economic data, the times, the days, the stuff that we're going to want to really pay attention to. And obviously, the technical analysis on the overall market. That's how we predicted last week where we saw the market going. We're going to do the same thing in this video here today. We're going to go over some trades, some trade ideas that we had last week, and just show how beautiful these trades worked out. And then we're going to go over some new trades that we're going to add to the watch list. And we're going to do all that right now. Before I get started, hit the thumbs up for the video and let's get right into it. So I always start here with the earnings for the week. So this is something very simple to find. I use Earnings Whispers on Twitter, so you can just take a look at that. These are all the companies that have earnings this week. So when we're trading, obviously, if there's any companies here that you like or that you're in, you got to know when their earnings reports are. And the way that I use these earnings reports, especially here on Monday with Nike, is I want to hear what the guidance is, what they're saying about China, supply chain. These are the types of things that can move markets. Like we said last week during our weekly watch list video about FedEx, they had earnings last week, and we wanted to see what they said. They guided better than expected. The whole market rallied. So that's what we're coming into this week, is a lot of fundamental type of news that's going to make markets move. Last week, it was more of a technical move. And I'll show you guys in a second that technical move that we called. It's going to get a little more tricky this week. You had the technical move. There's still room for that technical move to take place. But this week is really going to be focused by investors and the Fed right here on Thursday. You have the PCE, the personal income, the personal spending, all at 8:30 in the morning on Thursday. This is what the Fed loves to look at. This is their inflation gauge. This PCE is the number one thing that they look at, even more than CPI, to see if, inflation could be coming down. So Thursday, this is a huge fundamental macro event to move markets. Last week was a technical move. That was a technical bounce, and that's exactly what happened. Now, there's still room, like I said, to move up from that technical point of view, but now it's going to come into inflation again, earnings, and this data that we're going to see on Thursday. So you can see maybe a move up at the beginning of the week, and then it might, consolidate a little bit before Thursday. So that's that. And then I'll actually just show you guys what I was talking about here. So what we see on the SPY, and I posted this on Twitter, is off the bottom, we saw these 10% pushes right here. So these bounces, these 10% bounces right to this trend line. And I'll show you guys obviously on my platform in a second. But I just want to show you that history doesn't always have to repeat itself, but it often does. So that is what we're looking at for the week ahead coming up. And also, this is what we posted last week. So this is my Twitter account. So right here, before last week, so on Saturday, June 18th, this is something that I posted. we had these drops here off of the 20 EMA at 7%. Every single time it hit this 7%, 8% on this first one, we rallied. So this was posted last week. This is the type of technical bounce I'm talking about. Last week was a technical bounce. It had nothing to do with fundamentals. It had nothing to do with anything you may have heard on the news. That was a technical bounce. So 7%. And then what I'm showing you guys, once you get that pullback, we've seen that 10% rally to that trend line. The trend line's not here right now, but that's just something from a technical point of view that we've seen. So that's that. Just wanted to get through that for a second. And then let's just go here to the platform. And something I always start on is the SPY, our compass. This is how I determine, and I use daily charts, I use weekly charts. We're not using 1 minute charts on this, okay? This is a bigger time frame. This is a larger view of where we went, where we're going possibly, where we came from. And that's what I'm talking about with that historical type of patterns. This is technical analysis. This has nothing to do with fundamentals. These are technical patterns. That's it. So when we were down here, very, very oversold, RSI at 30, we saw the bounce. And I'm not the only one that called the bounce here. There was plenty of people that called bounces. The only problem I have is they try to tell you why the stock market was up on, let's say, Thursday or Friday or whatever. It was a technical bounce. These are technical breakouts. This is a gap fill here perfectly on the SPY. So learn to read charts. This is what we do every single day. And these are things I post every morning in our Discord trading community. If you're interested in joining that, the link will be in the description. But what I see here, looking at this from a technical point of view. So before Thursday, before earnings, before fundamentals and macroeconomic news gets in the way, I see a bounce going to this trend line. I see a bounce gap filling this, which would be about around 400 on the SPY. I think that's almost as close to a lock as you can get. Now you have the 50 moving average here at 405. So yes, I can see a continued bounce up to this trend line, something we've seen all year, a 10% move, a 10% move, a 10% move. So that's something from a technical point of view that we can potentially see. Now, on the volume profile on Friday, we had higher volume than the day before. So that's considered a follow-through day. That's a very good sign. That means more institutional investors, big money, is starting to put that money to work. We also broke over the 20 EMA. The last time we broke over the 20 EMA was this last bounce. You can see right here. So that last bounce, we closed over the 20 and then had another big day. And then we consolidated. Sort of what I was just saying a couple of minutes ago, when we see that maybe at the beginning of the week, we see a bigger green day, and then maybe we see consolidating ahead of that Thursday news. Now, you know, earnings, guidance from those big companies, that can also influence a little bit of this technical bounce, like I had said. You know, a lot of people are going to be paying attention to Nike on Monday. So we want to hear supply chain. We want to hear if the dollar strength is hurting their earnings, what they see guiding, stuff like that. So just keep that stuff in mind, but you do have gap fill and then gap fill to this trend line. We're still in a downtrend for the year. So until that breaks, until we get comfortably over the 50 moving average, we have to, still be on that. Maybe we're going to start to come back down. This is a technical bounce, like I said, but we need to start to see, inflation coming down, things like that. The Fed is obviously going to do anything to bring down inflation. Even if that causes a recession, they have to do it. So that was the SPY. This is the Qs. This is the tech stocks. This is the ETF that follows all those tech stocks. And we've seen the same thing. Another bounce. Now, we had this on from last weekend's weekly watch list, and we bounced to the penny off of it, okay? And I'm going to bring this one up on the weekly chart. Why was this on last week's video for a potential bounce? Because we were coming into this area where there was resistance and then support. And there was a lot of, buying coming around this area that set us into this beautiful second half of 2020 all the way to 2022. So this was going to be an obvious area to see a bounce, especially off of huge sell-offs. This is what we found. We're right around the 200 moving average on the weekly, which I have to change to, 20. Always keep up on this stuff. So the weekly is at 263.66. That's where the 200 is on the weekly. That's where we've seen some previous areas for this to bounce. That was also why last week we were just saying this could be a good area for a reversal in the tech. And that's what we saw. So now we have a nice big green bar for the weekly. The volume is a little bit lower, but that's because the market was closed on Monday. So we only have 4 trading days in here on this bar. If there was another trading day, the volume would have been much higher. So just keep that in mind. But that's the weekly here. So you can see, previous resistance is going to be up here. You're going to have the 50 moving average on the daily chart right there. So you can see right here, but we're over the 20 EMA. Like I said, last time we were over the 20 and then we consolidate. That's the pattern we've seen. This is the pattern on the SPY that we've seen as well. We get over the 20 and then we consolidate a bit. That's possible. We still have gaps to fill up here to 300, which is 6 points away. And then the 50 moving average that I can definitely see, try to get through. But we're just going to have to wait and see for this week. But that's the Qs. And then we look at the Dow Jones. So this one, why was this a very key level here? Pre-COVID, right? Pre-COVID highs. Pre-COVID highs, that's where we bounced off of, okay? So that's where we come up with this type of stuff, looking at bigger time frames. So looking at it on the, the 1 year chart here, the daily chart, this is a bounce over the 20, but we have these huge gaps to fill. So this gap, and by the way, gap fill is a huge trading technique. A lot of traders are looking at this type of stuff, and not just on regular markets, but even on stocks. And one of those stocks that we had called out last week, we had gap fill on something like that. So we're always looking for stuff like this. Big gap fill here, filled the gap. There's another gap to fill here. So all the way up to 323, and then you have the 50 moving average. So you still have room this week for some moves. But the only thing is, and if we look at the SPY again on the weekly, this is what we've seen all year long. You see a lot of red weeks, and then you see a big green week, and then some more downside. You see a big green week, and then more downside. So we're seeing a big green week. Maybe we get a couple of more, like we had a nice bounce, but there's how much more room is there? Those first moves are always the biggest. So now we have to trade and invest a little cautiously and, watch those inflation numbers, because this is kind of the pattern we've seen. We've seen much, greater moves coming back down with the red than the green, but we've seen big green bars. So this is nothing new. Look at this huge green bar, and then it sells off. This is a hammer, bullish hammer on the weekly, which normally would show some real strength here, and then you had 2 weeks of chop. So it's been a very tough market to trade, but we do our best by looking at this type of stuff. The technicals are huge. They're well respected. The trend lines are always well respected, but you also have to do your own due diligence. So that's the markets right there. Let me just take a look at this. All right, on the SPY, and this is going to be on most stocks from around April 1st, right, until now. This has been our trend. Okay, these bounces, they start, okay, back in March, but this is where we start the pullback here. So most stocks, and if we take a look at Apple, right, Apple did the same thing. Follows the market. These have big weightings on the market. And then we have that trend line, okay? So a lot of these stocks, like Apple, is coming into resistance, like the overall market. So when we were down here, things were oversold, we can have a bounce. But what we're doing now is we're bouncing back into resistance, which could slow things down a little bit. And looking at the VIX, same thing. From March, from March, the VIX tanked, which means the market went up. The VIX is the fear index. That's all it is. So when this goes down, great news for the stock market. So right here, this started to make those higher highs and higher lows, and our market went down, okay? Came back down to the trend line, things are looking good, and then this went up again, our market went down, the VIX is now coming back down towards this trend line, and wouldn't you know, this trend line right around here is probably going to be coming down, if the market is going up into that, SPY 400 area, it's going to be hitting a trend line here. Are we going to get a bounce? If we get a bounce, that means that the market is going to reject that trend line. So I know this is a lot of information. The more that you look at the charts and listen and learn, you'll understand more about how this stuff works. But this is the VIX, like I said, coming back to a trend line. And, if we just take a look at a lot of stocks, Microsoft coming back into resistance. We have Disney coming back into resistance here. We have Home Depot coming back into resistance. Meta coming back into resistance. Google coming back into resistance. Do you guys see what I'm saying here about how, that bounce was nice? Airbnb coming back into resistance. So when you have stocks like this, and let's just look at Starbucks here too, coming back into resistance. You have a lot of charts, and I showed you guys Apple already. You have a lot of charts that are going to be coming back into resistance. I'm not saying that they have to pull back, but you have to be aware that we're going to need a whole bunch of buying. So we're going to want to see a lot of volume in the market. So on those green days, we want to see volume because that's what we're going to need to push through resistance. And if we get that push through resistance on all these stocks, that's when you're going to see the overall market be able to break through its trend line. So just keep in mind, you have so many stocks that look like this that are going to be coming back into resistance. So stocks we're looking at for the week. Well, let's just go. We'll start here because this is one of them. This is actually something that I really like. And I think the possibility here for a breakout is really looking strong. On Friday, this volume profile is a very nice sign for the bulls. We broke the 50 very nicely. Now we have this area right here that's going to be resistance, like we had just said. When you have a lot of buying from institutions, a lot of times they're going to want to push this through previous resistance. It's also a very good deal. The PE on this stock is not bad at all. Starbucks has gotten just hammered. It's a good company. China reopening. You have a double bottom here. You have a break of a trend line that it retested all these days and then took off once it got back to the double bottom. You do have resistance here, but if that breaks out, I mean, this thing can really start to gain some momentum. We have a nice RSI right down here, very bullish. Okay, so Starbucks, that's why that one's on there. I would wait a little bit. This might start to see some resistance, but if it does get a break, I would definitely take calls and just capitalize on that one. Apple, another one that's coming into resistance, but this one was coming into this area of demand. So this is a demand zone. What does that mean? When it's in here, it's being held up and then eventually it breaks out of demand, retests, and then keeps going. So when it was coming into this green area, there was a good chance for a bounce. Like we said, though, we're coming into this trend line. The whole market is coming into this type of trend that we're going to want to see break. And if it does, Apple is going to be a stock that a lot of investors, want to add. So these people that bought here, that may have bought here, now they just buy when it comes back down to their support. They add to the positions. They average themselves down a little bit if they got in a little too high here. And this is just a nice area here to see a bounce. So it got the bounce. Let's see if it breaks trend. If it doesn't, and we'll look at this on the 1 year, the daily, I mean, if this doesn't, like what we've seen here, you break the 20 and then it has some trouble, okay? We broke the 20. We need to see this trend line break. If you get the trend line break, you have a move up to the 50 moving average at 150. So that's what we're going to look at. If we do get the break, 150 is going to be where I would want to take that trade off. So we get the breakout, start taking profits off here at the 50 moving average. But that's if we break the trend line. So you have to wait to see if that happens. Meta, another one. If we look at this on, let's go max weekly. Meta has a weekly trend line. We called this out last week. 2 weeks ago, the break of this, I took a very nice trade. I went over that last week, but now we're coming back into this trend line. So taking a look back on the daily chart, we're at this trend line. See what it does here. See what the market does here. This has had trouble around the 20 EMA a lot. So that's going to be like right around 174, 175. See what it does at this area. If you notice that things are starting to reject and the overall market's rejecting, probably not a bad idea to get puts here. But, you know, a lot of people were adding to positions and institutional investors were jumping in this. I mean, you could just tell by the volume profile there. So maybe we get the breakout. But like every other stock, you know, the easy move happened last week. Now we're coming into resistance. So let's see what it does here on resistance. So Meta, that's why that one's on my watch list. Now, this one, I'm going to show you because this was on last week's weekly watch list video that I made right here. So we were sitting at trend line when I made the video. I called for a breakout of that, and I'll just pull that up here so that you guys can see. This is what I post in our Discord. NEO, this stock is showing bullish divergence, relative strength compared to the overall market. The overall market here was going down and NEO was going up. That is very bullish. So I'm eyeing a break of this trend line to get long and fill the gap and to the 200 moving average. So this was a trade plan we put on in our Discord, and that is what is going here. So the gap fill right here is going to be around 2750, 2723 area. So just making that, yep, so that's perfect there. The 200 and gap fill. So what is gap fill? Like we said before, this is gap fill right there. All right. So this had a beautiful breakout. We can potentially see a move higher. Now Tesla has earnings next week. A lot of these companies are going to start to release some, you know, macro type of economic stuff. So that might affect this trade. But we saw a beautiful, beautiful trade here. You know, from 20 to 24, a $4 move on a $20 stock is beautiful. So hopefully some people took advantage of that one. But this is still, you know, very clearly on our watch list for continuation. And once these keep going, they get that momentum. So XLF, another one, okay? This is the banking sector. This is the ETF that tracks that. Coming back into resistance, but this has major gaps to fill. And this has been so oversold, even Warren Buffett started to buy banks. So let's see where this one goes. This, to me, looks like a breakout of all this consolidation. So if we get continuation, then we have moves up to the 50 moving average, which will mean most banks will really make a move too. So XLF banks this week, I think, can have a good week. XBI, this was another one on our weekly watch list video. Whoops. And this was another beauty, a beauty. So we were waiting for this to break. We had the double bottom. I love that setup. And then we had the breakout. Looks really good. Might consolidate for a little bit, but this one looks like it has some more legs to it. So XBI, that's why that's still on our watch list. We went over Starbucks already. Got all that done. So I think that's where we're going to cut it off here. Hope that you guys enjoyed the video. We go over the technicals. We go over the fundamentals. Last week was a technical bounce. This week we have more technical bounce to go, but we also have, like I said, those fundamentals coming in. And then once we get into earnings season next month, things can really start to get tricky. But we have room up to the 400 level on the SPY. That's going to be a very key area. Most traders are going to be looking for price to get there and then start to short sell there. So we'll see what happens, but that's it. See you back tomorrow with another video. Take care, guys.